Hey everyone, how's it going? Welcome back to another video on price action analysis. Today I'm going to focus on what I call a reversal impulse price action. So what is a reversal in price action? Well, you're going to see a strong impulse first from the market, whether a bearish one or a bullish one, but immediately followed by that impulse, there is no correction, there is no continuation, there is no reversal. Instead, there's no reversal correction. Instead, it's a reversal impulse followed by continuation correction to push the price up. And I've been doing a lot of backtesting. I've been doing a lot of chart work to identify these over the years, and I find them to be very effective when you spot them on the higher time frame, when you spot them on the lower time frame, to give you that extra confluence to look for a potential entry. So let's take a look into what it looks like when the typical reversal impulse happen. So we're going to go through a few examples in currency, commodity, crypto, and indices market to give you guys an idea how to spot them and how to utilize them. So starting here with Aussie dollar, we know that this is a strong bearish impulse down, and we know that the typical impulse is likely to follow by a continuation to correct before it continue dropping, or it's likely to form a reversal structure to reverse the price. But sometimes neither the correction happens. What we get is just a sharp impulse, a reversal impulse from the previous trend. So pretty much a clear trend change. And if we find them or spot them after a continuation correction, we're likely and a very high probability to continue that reversal trend to start. So let's look at a few examples here. Let's look at dollar CAD. Dollar CAD, we talk about dollar CAD a lot in price action, but let's dig a little bit deeper here. When we talk about price action, we talk about an impulse, we followed by a continuation correction, and we're likely to resume the impulse. That's basic understanding. But if we look closely here what the price is doing, we can see that there was a bullish impulse up and no continuation, no correction, no reversal correction. Instead, it's a reversal impulse down. Very sharp reversal impulse down, followed by a higher time frame continuation correction, and then resume the impulsive move. So making this an impulse, correction, impulse. And if we look closely here, if we look at the lower time frame price, this is why multi-time frame analysis is super important, because you see at the end of this continuation kind of correction on the higher time frame, there is a little bit more clue here. We see not only a head and shoulder pattern, but we also see a reversal impulse. This is a bullish impulse up, followed by a bearish reversal impulse, and then continuation correction. So really, this is that first potential sell to continue the higher time frame impulsive phrase. And we're going to spot these a lot because we're going to see a lot of confluence added up together when you see lower time frame price action, lower time frame correction to add to your confluence. Let's go through a few more examples here on currency. Aussie Swiss here on the higher time frame. So we see that impulse, correction, we see an impulse, very sharp impulse, but no continuation correction, no reversal correction. Instead is a reversal impulse, higher time frame continuation correction, and then we resume the bullish price. So when we spot them continuously, when you understand them, when you understand how they happen and why they happen, it's easier to make a plan and adjust to what the price is doing. So let's look at a lower time frame example here. So on the higher time frame here on Aussie yen, we're potentially getting to the top now. So potentially a double top in the making. So what do we have on the lower time frame? Well, we have all these bullish price action. We have an impulse, correction, impulse. So no longer bullish anymore. We did not see continuation correction. We did not see continuation correction like what we have seen in the past. Instead, it is a reversal impulse down. So pretty much a clear trend change. We break this previous low. And if we can get continuation correction, this is what makes these reversal impulse work very well, is after a reversal impulse, it has to follow by a continuation correction to give it much more in-depth and much more confluence to look for that continuation sell to push the price down. We have the higher time frame double top, we have the lower time frame reversal impulse price action. So if we can get a continuation correction here on the lower time frame, we're likely to play out this bearish reversal. So when we pair higher time frame and lower time frame, this is why it's super important to understand that on the higher time frame, even Even if we did not get the higher time frame reversal impulse, but when we have a higher time frame reversal structure, we can pair that with lower time frame reversal impulse. So what do I mean by that? Let's look at Euro Aussie here. Euro Aussie is potentially looking at this as a double bottom area now. And how the price reach that double bottom? Well, we reach down there with the descending channel. So if we go into the descending channel, what do we have here? Well, descending channel pushing the price up, and then look at this impulse down, and then where is the continuation? Instead, we have a reversal impulse up to up, and right now we're touching to the top of the structure here. So whether a continuation correction here or a breakout followed by continuation, I believe both of them are very valid to reverse this higher time frame structure and then to lead into the next bullish move to the upside. So that is what I see when I stack higher time frame and lower time frame confluence, multi-time frame analysis. So one more example from currency, same idea here. Euro Kiwi, double bottom here on the price. And then if we look closely, it's the same kind of descending channel that we just saw on the Euro Aussie kind of example. So descending channel moving to the double bottom. And guess what we have here on the lower time frame? We had an impulse, we had a correction, we had another impulse. But where is continuation? Where is reversal? Instead, sharp bullish move to the upside. So that is the bullish reversal price action, bullish reversal impulse. So looking for continuation here. We're looking for price just break above that structure and form continuation, and we're going to likely see that reversal impulse from the price. So that's all the kind of currency example I want to talk about. Let's go into a few commodity examples to show you guys case of different kind of scenarios. So here on gold, if we look at the previous price action, at the time, we formed this double top, we formed this M-style pattern, and then price pretty much impulse down. Again, no continuation correction, and what we have here instead is a reversal impulse. A reversal impulse followed by a continuation correction, and to reverse the price breaking a previous high. If we zoom out again, looking at the price here, pretty much what price did is an impulse down and a reversal impulse up, so a reversal impulse up and then continuation. So making this just a one big impulse on the price and one big higher time frame continuation, and then resuming the price afterwards. So that's something to keep an eye on how significant they are when we spot them on different time frames, especially on the higher time frame, because when you correctly see them on the higher time frame, when you spot them on any kind of market, you'll notice that they happen when price just had a very sharp move. So this is usually during from strong momentum or strong news event. In this case, it's going to be from COVID. We have this impulse down from the price, we have this impulse down, followed by a continuation correction, and then pushing down again. But no continuation carry the price after. Instead, we have a reversal impulse up, and then continuation correction to push the price higher. So when you do more backtests, when you spot these kind of reversal impulse kind of price action, it's going to add confluence to your analysis, confluence to your trades. So go through a few crypto example here. I talk about that any market, any time frame, right? So in this example here, we have a bullish move to upside, we had a correction, we had a bullish move. So very strong bullish move, but not followed by any more structure. Instead is a reversal impulse down followed by a continuation correction. So making this as an impulse, correction, impulse. So sure enough, this continuation confirms this reversal impulse is the first sign of the price, and then looking like it's going to drop more and more and more. And same thing with here, the stellar position, bullish breakup, both breaking this previous high, and then was looking for continuation correction, but instead we had a reversal impulse, continuation bearish price action, and then price drop down more. Okay, and last few example I want to touch base on is some indices, because we're going to see them on different markets, but how to effectively capture them while understanding that when you spot them on the higher time frame, it's going to be more significant, right? Because the higher time frame is going to give more weight on how the price is likely to move. So in this example, UK 100, we have a bearish impulse down for coronavirus, and then a bullish reversal impulse followed by a bullish continuation. So we understand that there is a bullish continuation forming from this impulse, and we understand the price action just had a reversal impulse. If we get a completion of this higher time frame continuation, it's very likely to resume the previous trend, the previous bullish trend. So understand that from the higher time frame perspective, how to take advantage of that on the lower time frame. Well, if we zoom in here on the lower time frame, guess what we have here? Instead of the bearish move continue down and push down the price lower, we did not. We get a lower time frame. We get a lower time frame reversal impulse. You can see the bearish move did not continue lower. Instead, it's a bullish reversal from the price and a bullish continuation from the price to continue. And that is a sign from the price when you see higher time frame here, when you see higher time frame is about to have another bullish continuation, and lower time frame is also showing you that reversal impulse price action is going to add confluence, it's going to add confidence when you look for entry like this. So German 30, same idea. It doesn't matter how you spot these reversal corrections. They may or may not be very strong reversal impulses. It can just be a very quick reversal impulse. In this case, in German 30 DEX, bearish move to the downside, reversal impulse, continuation correction, and then continue the price. Notice that it did not have a reversal impulse very sharp followed by continuation, but this example here is still an impulse, reversal impulse, continuation, and continue the price. So it's important to backtest and understand these correctly, because when you spot them more often, when you start seeing them everywhere in the market, when you start understanding that how to effectively use them on the higher time frame and lower time frame to look for confidence, look for clearance, look for confirmation and entry. So this is how we lead into more confidence when we enter trades, because when we backtest enough, when we see the bearish reversal impulse, when we see this impulse down and then a bullish impulse up, followed by continuation correction, we know there's a strong probability that we're going to get that continuation, making this an impulse correction, impulse to upside. And that is why price action is very key in trading, is you understand that price action repeats himself. You understand that structures, higher time frame, lower time frame, multi-time frame analysis, you look for confirmation. So in this latest bit of the price, we're seeing that potential double top here in the making, lower time frame ascending channel in the making, and higher time frame kind of expanding channel. But if we go down to the lower time frame, what do we have here? We have this kind of correction structure. We have a bullish impulse pushing up, and then no continuation to go higher. Instead, bearish impulse down, bearish continuation, and looking for further downside to reverse out of this correction and continue to the lows. Okay, so that is my take on these reversal impulse price actions. Okay, you're going to spot them everywhere, any market, and any time frame, but it's understanding how the price gets there, how the price reverse the price action, reverse the impulse, and that continuation correction is key for the price to continue to upside. All right, everyone, so thank you very much for tuning to this video on reversal impulse price action. I will talk to you guys next time. Thank you very much.